through the significance and some of your takeaways we've initially got from the details about this deal.
Yeah, well, this is all about power, especially computing power, because computing power is the foundation for building out AI, Gen AI, agentic AI. Everything based on AI needs more computing power, and NVIDIA knows that. So this is a $100 billion investment with OpenAI to build out that computing power, basically in scales, right? $10 billion per gigawatt produced. And it's a massive investment, but don't forget, NVIDIA and OpenAI, they've been doing business together for quite a while, about 10 years, and they've done very well by each other. Basically, these companies are building on partnerships that they've already established, and OpenAI, of course, has the big partnership and the investment for Microsoft, Oracle, SoftBank, and Stargate, and NVIDIA was one of the early funders of it, so this expands its capacity.
And Caleb, this is an ambitious undertaking for both of the companies. So I suppose it begs the question, is it actually possible? I mean, to use Jensen Huang's own words, it's monumental in size.
Yeah, monumental in size, but it's just really the beginning of the super scale build out. We're probably in the second or third inning, depending who you're talking to. And we're going to need a lot more power if AI is going to fulfill the promise that's been put out there by industry and the one that keeps evolving over time. So it's a massive undertaking. It's going to require a massive infrastructure build, but without it, you can't have the scale of computing power you need to deliver on what AI is supposed to deliver over the next decade or 2 decades. So that's a big part of it right now. And when you think about what we need in terms of power, gigawatts are the biggest the metric of electricity we have here. We're going to need hundreds of gigawatts, and we're talking about here now 10 gigawatts here. So this is just the beginning of a lot of build out. I expect a lot more announcements like this in the future, but it's actually necessary for these companies to be able to scale.
Yeah, but Caleb, I mean, is there enough energy really to power these ambitions? I mean, is this going to be a sort of a constraint for some of these companies that are partnering up and doing this? I mean, every day it seems like we hear about some sort of new energy deal, whether it's, nuclear or whatever else it is. And certainly that has become a big theme. But no doubt Jensen Huang and co have talked about the risks of, perhaps a lack of infrastructure too.
Yeah, if you go to any AI conference right now, that's what they're talking about as well. We need all this power, but where is it going to come from ultimately? Which is one of the reasons we've seen power stocks, especially last year, enjoy that nice little rally. And last week, the nuclear stock rally was something to behold as well, because we're going to need a lot more of that build out as well. We're going to need a lot more power to power AI, and it's going to run through these companies. But Sam Altman said it himself in today's press release with this announcement saying, you're going to need to have compute infrastructure is the way they call it. And compute infrastructure is going to have to scale tenfold. And for these big superscalers and the builders, the NVIDIAs of the world that are making the chips for these data centers, the Microsofts that are hosting this, and Azure and some of the cloud computing companies out there, they know that they're going to need to scale as much as possible, which is why they're not afraid to spend as much on CAPEX as they have been spending. And they have been spending tens of billions of dollars on CAPEX, much more than they're recouping in terms of revenue and productivity at this point in the AI cycle. But the hope is that eventually catches up. They'll spend less on the build out and start reaping the rewards of it in the next 3 to 5 years. And that's what investors have been putting their.
Following their biggest one-day percentage rise since July, NVIDIA's shares fell in early trade on Tuesday due to reports that the AI favorite intends to invest up to $100 billion in OpenAI. On Monday, the price emerged from a symmetrical triangle, suggesting that the stock's upward trend will continue. Barr's pattern analysis predicts a price objective of about $255, while the measured move technique predicts a price target of $207.64. On NVIDIA's chart, investors should keep an eye on the important support levels around $165 and $150. Following their biggest one-day percentage rise since July, NVIDIA's shares fell in early trade on Tuesday due to reports that the AI favorite intends to invest up to $100 billion in OpenAI. As part of the agreement, NVIDIA will provide OpenAI with its next-generation Vera Rubin platform, enabling the ChatGPT manufacturer to construct data centers and other AI infrastructure with a minimum power capacity of 10 gigawatts. The businesses stated that they expect to complete the partnership's specifics in the upcoming weeks. Following a roughly 4% increase on Monday, NVIDIA shares were down 2% at over $180 in current trading. The stock has risen 37% in 2025 as of yesterday's closure, easily surpassing the gains of the overall market during that time. As the company increases its AI capabilities, investors have flocked to the stock as sovereign clients and large tech hyperscalers make significant investments in its products. We examine NVIDIA's chart in more detail below and use technical analysis to pinpoint important price points to keep an eye on. NVIDIA's stock stabilized in a symmetrical triangle after hitting a record high last month, but on Monday it broke out of the pattern. With rising volume in recent days indicating conviction from larger market participants, the breakout suggests that the stock will continue its prolonged upward climb. It's also important to note that the relative strength indicator has confirmed growing price momentum by returning to bullish territory. In light of the possibility of follow-through buying, let's look at NVIDIA's chart to identify two possible bullish price goals. We'll also highlight important support levels that should be watched during any further retracements. If the stock rises to a new all-time high, investors can predict an initial price objective using the measured move technique, commonly referred to as the measuring principle. This is accomplished by adding the pattern's top trendline value to the percentage change between the two trend lines of the symmetrical triangle close to their widest part. In this instance, for instance, we apply a 16% rise to $179, projecting a target of $207.64, or around 13% over the closing price on Monday. Investors can utilize Barr's pattern analysis, a method that forecasts future directional movements by analyzing past trends, to predict a longer-term price goal. The method is applied to NVIDIA's chart by overlaying the stock's upward trend from May to August with Monday's breakout point. This suggests a possible price goal of about $255, which would represent an increase of almost 40% from yesterday's finish. Following Monday's clear breakout over the 50-day MA, this previous rally increased after breaking out above the 200-day MA, which may have given hints about how a new trend higher would develop. Important support levels to keep an eye on. When additional pullbacks occur, investors should first keep an eye on the $165 level. Near a trend line that connects a sequence of price movements on the chart dating back to early July, this area might offer support. Ultimately, a more significant decline in the market allows for a retest of lower support at $150. Near a number of peaks that developed on NVIDIA's chart between November of last year and January of this year, investors may seek buy-and-hold chances in this area. One of the stocks that visitors are now keeping the greatest eye on is NVIDIA. Therefore, it could be wise to examine some of the variables that could influence the stock's performance in the near future. Shares of this manufacturer of AI and gaming graphics chips have increased by plus 2.1% over the last month, while the S&P 500 composite has increased by 3.6%. NVIDIA is part of the semiconductor general industry, which has increased 2.8% during this time. Now, the most important question is, where might the stock go in the future? The buy and hold choice is always influenced by a few key elements, even if media stories or speculations regarding a major shift in a company's business prospects typically cause its stock to trend and result in an abrupt price change. Revisions to earnings estimates. At our organization, assessing the shift in a company's earnings forecast is our top priority. This is due to our belief that the present value of its future earnings stream determines the fair value of its stock. In essence, we examine how sell-side analysts who follow the stock are updating their profit projections to account for the effects of recent business developments. Additionally, the fair value of a company's shares increases when its earnings projections improve. When the stock's fair value exceeds the current market price, investors are more inclined to purchase it, which raises the stock's price. For this reason, empirical research demonstrates a substantial association between short-term stock price movements and trends in earnings estimate revisions. NVIDIA is predicted to report earnings of $1.23 per share for the current quarter, which would represent a change of plus 51.9% from the same period last year. Over the past 30 days, the consensus estimate has changed by plus 5.8%. The current fiscal year's consensus earnings projection of $4.45 is a plus 148.8% year-over-year change. Over the past 30 days, this estimate has changed by 4.2%. The consensus earnings estimate of $6.09 for the upcoming fiscal year represents a plus 39.2% shift from NVIDIA's predicted earnings report from the previous year. The estimate changed by plus 8.6% in the last month. Because it successfully leverages the power of earnings estimate revisions, our proprietary stock grading tool, the rank, has an exceptional externally audited track record and is a more definitive indicator of a stock's near-term price performance. NVIDIA has been ranked number 3, hold, due to the magnitude of the most recent shift in the consensus estimate as well as 3 additional earnings estimation-related variables. The following chart illustrates how the company's forward 12-month consensus EPS estimate has changed over time. Even if earnings growth is perhaps the best measure of a firm's financial health, if a company can't increase its revenues, nothing happens. After all, without expanding revenues, it is almost hard for a business to sustain a long-term increase in earnings. Therefore, understanding a company's potential for revenue development is crucial. The current quarter's consensus sales forecast of $54.52 billion for NVIDIA indicates a plus 55.4% year-over-year change. Changes of plus 56.7% and plus 31.8% are indicated by the $204.5 billion and $269.63 billion forecasts for the current and upcoming fiscal years, respectively. In the most recent quarter, NVIDIA recorded $46.74 billion in sales, a plus 55.6% increase from the previous year. EPS of $1.68 a year ago as compared to $1.05 for the same time. The reported revenues are a 1.3% surprise when compared to the consensus estimate of $46.14 billion. 5% was the EPS surprise. NVIDIA has exceeded consensus EPS projections 3 times in the last 4 quarters. During this time, the company consistently exceeded consensus revenue projections. No investment choice can be effective if the valuation of a stock is not taken into account. Determining whether a stock's current price accurately reflects the underlying business's intrinsic value and the company's growth potential is essential when forecasting the stock's future price performance. While it is possible to ascertain whether a company's stock is fairly valued, overvalued, or undervalued by comparing the current values of its valuation multiples, such as price to earnings, PE, price to sales, PS, and price to cash flow, PCF, with its own historical values, comparing the company to its peers on these parameters provides a good sense of the reasonability of the stock's price. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Caleb, as we continue to have these conversations about these data center build-outs and the massive investments that are going in, I mean, it really is speculative spending at this point. We know there's a need, but there isn't an actual demand. There aren't actual customers yet. So this AI bubble concept keeps coming up. What are your thoughts about the AI bubble as it relates to data center build-outs?
Yeah, great question. I was speaking to Dan Niles about this earlier today, who's been watching this very carefully, and he's saying basically, like a lot of other smart analysts, you can't not build out if you are going to play in this game in the next 5 to 10 years. And there's only going to be 3 to 5 companies that are going to be able to afford to scale at this rate because they have cash flow from other parts of their businesses. Microsoft actually has the Office set of products and software that they sell. Alphabet has YouTube and the other ways that it monetizes through search. Meta has tons of ways of making money off of us, whether it's advertising or in other ways. So they can afford to spend out while they're still proving the concept that this is actually going to pay off down the road. Not every company is going to be able to make it. The beneficiary front and center has been NVIDIA. As I've said, they've been in business with OpenAI trying to build out this computing infrastructure for over a decade now. Now they're making a massive bet in the form of $100 billion over ever how many years it takes to build this out. They think the first gigawatt's going to be built out within the first 6 to 12 months, and then maybe get quicker from that point on, and maybe we'll start to see some actual results from this spend.
You know, it was interesting, wasn't it, Caleb? Because it was actually Sam Altman who sort of warned about a bubble more recently. And I suppose we all wish we were a sort of fly on the wall last week in Windsor Castle when these two guys were sitting down, whining and dining with the president and also British royalty. But I'm just wondering, you know, I suppose you've sort of explained the move behind NVIDIA today because of the fact that, you know, no doubt investors see value in this deal. But I'm just wondering, you know, for those who perhaps have missed the boat on, you know, names like NVIDIA. I mean, how do you approach this trade? How do you look at this as we see these sort of eye-watering figures being thrown out there by these big companies? How do you approach this right now?
A great question. When you think about today, 2025, and the big spend here on the valuations, the stretch PE ratios, the stretch price to sales ratios, you can't help but think back to 1999 and the internet bubble build-out, when the superscalers were companies like Cisco that were actually providing the equipment, right, to make the internet possible. Well, that's where NVIDIA is today. And while it may be very highly priced and at all-time highs, you could have said that 2 years ago, 5 years ago, 10 years ago. Just put this stat in your mind for just a second. OpenAI came out to the public. OpenAI was released commercially to the public in November of 2022. NVIDIA stock is up 935% since then. So it has been the right play all along in this build out. And you have to ask yourself as an investor, is it going to be here in 3 to 5 years as still one of the major dominant companies supplying the infrastructure and the chips for this build out that's going to continue for the next decade at least? I think the answer is yes. So while we may get a pullback at some point and a sell-off at some point, right now it is the main stock to play at this point in time, as well as Alphabet, as well as Microsoft, as well as Meta when it comes to AI. They're actually winning. Apple hasn't even really begun to fight in this capacity yet. The iPhone 17 may change that. So these names are expensive. They're expensive for a reason. They're the biggest stocks in the world, and they are the leaders of the pack in terms of driving the AI revolution.